This should be required viewing for anyone who wants to buy a home. I'm going to explain the 18 key things that every buyer needs to hear. Let's go. Every journey to buying a home begins with two things: motivation and desire. For instance, the desire to buy a house becomes motivation when someone starts saving money or seeking a mortgage. From there, people save up their money. This leads to looking at home listings online, and everything seems like it's on the right track, right? Not exactly, because this is actually where things start breaking down. See, most people think that this eventually leads to the home purchase. The goal is to get to that point, but here's where the problem is. After finding a bunch of homes they like, 9 times out of 10, 80% of these properties are outside of their budget by about 15%. This happens 90% of the time. So what ends up happening is that instead of getting to the goal, the buyer ends up going back over here to save more money and looks at listings in that price range, and also gets into this perpetual cycle of never reaching their goal. They completely ignore what their current budget allows and chases for something more expensive that's currently out of reach. And that's actually okay only if you fully understand and agree with yourself that the home you want to buy is going to cost more than what's possible right now, so you have to spend more time saving up a bit more money. Where it's not okay is if you set yourself up for failure by looking at those properties priced 15% above your actual budget, because you end up subconsciously setting that as your baseline for your goal. This is one of the reasons why a lot of first-time buyers never reach their goal of buying their first home. So how do we get out of this perpetual loop so that instead we can reach our goal? The first thing every buyer needs to do is to establish their budget. I'm not talking about guessing and using the rule of multiplying your income by 5 times to get the value of homes you can afford. It's not comprehensive or accurate, so I don't recommend this. The true affordability of your next home depends on multiple factors beyond just income. Lenders typically look at how much of your income is already committed to debts like car loans, student loans, and credit cards. The more debt you have will reduce how much you can borrow for a mortgage from the bank. If you're thinking about buying a new car, hold off a little longer. I'll tell you a story. When I was buying my first home, I was driving a 1995 Honda Civic Si. The car was about 18 years old, and I got to a point where I was putting in thousands of dollars every single year to maintain it. Buying a new car would have hurt me in 2 ways. I would have had less savings for the down payment, and I would have had a large amount of debt showing on my credit report that would reduce my buying power. So I opted to hold off on the car purchase to have more than 20% for my down payment, which also, by the way, gave me access to better mortgage rates. So assess your financial situation, including income, expenses, and savings. You can also use a mortgage calculator online to figure out your affordability. Second thing you're going to do is save for your down payment. Aim for at least 20% to avoid mortgage insurance. Explore options for smaller down payments if that's necessary. If you have a bad habit of buying things you don't need, get out of that habit. A larger down payment reduces the loan amount and monthly payments. If your goal is to buy a home this year, making a down payment of less than 20% is still an okay option. Some people don't know this, but you can actually cancel your CMHC insurance once you have 80% or less left to repay on your loan. So if your income increases over the years, and hopefully it does, you can pay down your mortgage balance to get to that 80% or less. 2 benefits come from this: no more mortgage insurance premiums and lower monthly mortgage payments. Next, get a mortgage pre-approval. So many people leave this to the last minute, but there are several benefits to doing this earlier on before you even start looking at properties in person or even online. You'll know exactly how much you can borrow. This is going to ensure you can focus your home search on properties within your price range, saving yourself time and avoiding disappointment. It also gives you peace of mind, which can also help during negotiations if you know you can remove a financing condition from the offer, especially during a competitive market. When it comes down to 2 offers that are exactly the same and one of them has a financing clause, the one without is likely more to be picked. Step 4 has to do with what the government programs are in place for first-time buyers. Here's a few of them. The Home Buyers Plan lets first-time buyers take out up to 35 grand from their RRSP accounts tax-free to use towards the down payment on a home. If you have one account with 10 grand and another with 5 and so forth, it doesn't matter. You can pull the money out from all of those accounts, up to 35 grand, for the purchase of your first home. In the second year after you take the money out, repayments begin and have to be completed within 15 years. In 2023, the First Home Savings Account was created. created. This lets Canadians save up to $8,000 annually and up to $40,000 in their lifetime for their first home. Contributions are tax deductible, and withdrawals for a qualifying home purchase are tax-free. Think of it as a combination of an RRSP and a tax-free savings account. Provincial and municipal land transfer tax rebates are available for first-time homebuyers as well. In Toronto, for example, first-time buyers can receive up to $8,475 in rebates to offset land transfer tax costs. These three programs could help you save a ton of money when you're buying your first home, so check them out. The fifth thing you're going to do is check your credit score. A higher credit score is going to tell the bank that you're reliable, making it more likely that your mortgage application will be accepted. Your credit score also has an impact on the interest rate you're offered. A higher score typically gets you a lower interest rate, which can save you tens of thousands of dollars over the life of your mortgage. A bad credit score can also impact how much down payment the lender wants from you. Buyers with lower scores might need to provide a larger down payment to compensate for the risk that the bank sees after looking into your credit. So things like paying your bill on time and keeping the amount of credit you're using to less than 30% can help bring up your score. If you're addicted to opening up credit cards for new sign-up rewards, that should probably stop for now. I get it, air miles and points are cool, but you know what's cooler than points? Owning your home. So focus on that goal. When you're focusing on the goal of buying your first home, you can also start thinking about the location of where you want to move to. Think about what's important for you in terms of location. Do you want to be close to work? Are you thinking about daycares and schools? Do you need to be close to the subway line or highway? Or maybe you're thinking about the potential growth in value 5 to 10 years from now, so you're trying to get into a neighborhood that has consistently shown some of the best returns in capital appreciation over the years. Whatever the case is, prioritize location and figure this out early on, and you'll end up wasting a lot less of your time researching homes in areas that you wouldn't want to move to anyway. Number 7 has to do with a bit of future planning. The average Canadian moves 5 to 6 times in their lifetime, so in most cases, the first home you buy isn't going to be your forever home. Think about how long you plan to stay in the one that you're buying this year and ask yourself, does it suit your lifestyle in the coming years? Do you plan on having a family? Are you in the oil and gas industry and you might want to move to Alberta in 5 years? So just remember that the next home you're buying is a milestone in your life, but it's also one of many stepping stones in your life. Everything up until now has been in preparation for your home search. After you've got your savings ready, you're pre-approved, you know your budget, you know the different locations you're willing to move to, and now you're ready to start looking at some properties in person. Find a real estate broker that can guide you through the process of buying a home, who also takes the time to explain the forms, and one that can educate you on all the steps you need to follow, and also one that will negotiate on your behalf to get you the best deal on your next home purchase. Your real estate broker can also recommend a real estate lawyer. Once you've got your real estate broker, just remember that you can ask them any questions you want about the market. They'll help you understand if it's a buyer or a seller's market, or what kind of home prices you can expect for various property types. Things you might want to know are like the sales of single-family homes and how they're on their way up right now, whereas sales in the condo market are down, and that's because of the lack of demand. Ask about how the rate changes from the Bank of Canada are also impacting your local real estate market. We are expecting improved market conditions this year, which is heavily influenced by further rate cuts with the key interest rate. But as of today, there hasn't been an immediate effect from the recent rate cuts because high borrowing costs are still suppressing buyer activity. So get these sort of questions answered and decide how it's going to impact your goal of buying your next property. Step 10 is pretty easy. Think about what you need to have versus what you want to have. Make a list of your priorities. Something you need to have might be 2 bedrooms, a workspace for your office, maybe 2 parking spaces or a specific location. Things you want but don't necessarily need might be a 3rd bedroom or a den for some extra space, or features like hardwood floors or smooth ceilings. Try to be flexible with things like these so that they're not in the way of making your final decision. Step number 11. You know what your monthly mortgage is going to be based on the price of the homes that you're looking at and your mortgage pre-approval. But with every home purchase comes new monthly bills that you need to consider. So you also need to budget for additional costs. Think about what your property taxes are going to be, how much utilities are going to cost you, and also any maintenance expenses, whether it's a condo maintenance fee or setting aside a budget for an emergency fund. Okay, so now at this point, you're checking out different homes and you want to make sure that you're buying something that's not going to cause you trouble in the near future, or if it will, you want to at least identify those problems you might run into. Hire a professional home inspector to identify potential issues before you commit to any property. Whatever you do, don't rush the sale. You might feel pressure from the seller, but make sure you and your real estate broker are doing your due diligence. Take your time to explore options and organize your thoughts, especially in competitive markets. If you've done all of these first 12 steps, you've already done a lot of the things to reassure and trust yourself. Step 14, 17, you found the right place and it's time to make an offer. The offer process itself can be complicated and you'll have your real estate broker to negotiate on your behalf. Now, don't worry because you won't be agreeing to anything that you don't want to. For instance, if the seller wants $10,000 more from you, you don't have to say yes. If they want the inspection or financing or status certificate review clauses taken out, you can say no. This is all up to you and what kind of negotiating skills your real estate broker has to help you get the best deal. When you're caught up in the moment of buying your next home, you might also get caught up in emotional buying. Here's how it happens and why you need to avoid it. Buyers might fall in love with a property because of the way it's been staged, it has a beautiful view, or even luxurious finishes can evoke strong emotional responses. Avoid this because it can lead to overlooking critical aspects of the purchase like affordability or maintenance. Don't get caught up with the fear of missing out. It's not worth it. There will be other options. Step 16 is after you've made the deal, you can now revisit your options with your bank. They'll need the purchase agreement and they'll also reassess what you can qualify for. They might also get the property appraised to make sure the property was purchased at a fair market value and not for some crazy amount over the asking price or above market value. During this step, you can also consider if you're going to go with a variable or a fixed rate mortgage and also understand terms like amortization period and prepayment options. In step 17, you want to plan for your closing day. On closing day, you'll get the keys to your new home. Hopefully you gave yourself enough time between now and then. Usually closing days are about 30 to 60 days out. Be ready for final paperwork and any utility or maintenance accounts you need to still set up. You should also make sure funds for closing costs are accessible for your real estate lawyer to facilitate these final steps. Think about moving companies or truck rentals and which friends and family you're going to ask to help you out. The 18th and final step is all about what you want to do in the future. You've reached this goal, so now start thinking about your next goal. You can do that or just sit back and relax in your new home and just enjoy your life. If you made it this far, I appreciate you. Make sure you subscribe because new videos are coming out all the time to help you reach your real estate goals. Thanks for watching and I'll see you in the next one.